Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, I had intended to look at two banks in the region, significant banks in the region, one being NCB Financial Group, as well as Republic Bank, and what they have performed in terms of their half year. But we'll switch a bit and talk a little bit later in this broadcast to speak to the question of what's happening with our economy and what is the performance like and what our expectations when the Honorable Minister comes forward, sometime expected later this week or sometime next week, to speak about where we are at the half year. And I wanted to speak a little bit about that, but let me just go first and speak to NCBJ, and then we'll talk very quickly about Republic Bank. NCBJ bottom line is earnings per share is up by 15.6%, and that is driven by all areas performing better in terms of the revenue generating areas. Of course, operating expenses will have gone up a bit as well, and share of associated companies has fallen. We don't know how this fits really into the results of Guardian Holdings, which NCBJ owns some 29.99% indirectly of, because the Guardian Holdings at the time of our publication was not out yet. But our outlook is we have a neutral position on NCBJ, and basically what we are saying is that when you take out the negative goodwill, growth in earnings would have been about 2.8%. That is, this line, the negative goodwill arising from its acquisition of a banking company out of the Bahamas. Let's turn now quickly. Our outlook, as I said, is neutral. Dividend yield is about 2.5%, and that's why we have our neutral outlook. I will skip a couple graphs and go to the Republic story at the half year. And again, what you would see in the Republic case is that it continues to grow, albeit somewhat slowly, in terms of its operations, both in terms of the balance sheet, but more so in terms of earnings per share. Of course, affected by what's happened with higher threshold of taxation and the economy of Trinidad and Tobago, for which the chairman has said that we expect that things to continue to be muted from the Republic Group perspective. Earnings per share up from 390 to 401 at the half year ended March, and this is a 2.8% figure as well. What are the drivers? All of the areas: net income, operating expenses, of course, is a little bit up. Operating profit, good story to look at, loan loss impairment, not a significant increase, and that is important when we are looking at an economy that is challenged, that loan loss impairments on the books of Republic will give you some sort of indicator of what is happening out there, as well as the management of the company, Republic Group. So let's talk a little bit now as to what's happening out there in terms of our expectations for the economy. Well, the Honorable Minister has come forward and in a release suggested that the volume production of natural gas was higher than what was given to S&P, and therefore the stable outlook was somewhat impacted by a negative outlook in terms of what is expected maybe over the next 12 to 24 months by S&P. Important considerations in that was the comment on the pressures of foreign exchange access and the currency exchange that is in fact building up with the shortfall or the dropping off in reserves. But still a reasonable result or outcome in that we remain BBB+, and we can talk a bit more about that. Let's wait for the figures to see what's going to happen. Where are the areas that, if the result, as we expect, is somewhat more encouraging than the last half-year result, what's going to happen in terms of how the economy is going to be stimulated to get us up to the next level. Expectations for growth will be 1.5%. We are being told that is the estimate. But more importantly, the stimulus. Well, there is very little room to for fiscal stimulus in that government or the coffers of the treasury are somewhat bare. But there is room on the monetary side to increase or to reduce interest rates. Lowering interest rates can provide a stimulus to the economy on the monetary side, and all the conditions are essentially ripe for that. Very low inflation historically, the need to drive the domestic economy, the fact that there is sufficient or more than sufficient liquidity to provide, to give stimulus to the economy, albeit at the lower price of money. And finally, the continuing issue of whether the differential in interest rates means anything when the foreign exchange access as well as the rate is seemingly artificial when you look at what the unofficial market is doing at about $8 and what the official market is doing at about $6.80. Those are some of the issues that we have to consider. Look for us on the newspapers for our various mutual funds under the rubric of Bourse as well as Save Invest. And finally, have yourself a wonderful investment week as we look forward to the report, the mid-year report on the economy. This is Subhas Ramkhelawan for the Bourse Report.